One of the biggest mistakes I see retirees make with investing is they're swinging for the fences in the stock market. They throw a big chunk of their retirement savings into one stock or into one sector. They're hoping to hit a home run that'll fix their finances or maybe even put them on easy street. But here's the thing. There's no such thing as get-rich-quick schemes, at least not one that I've come across. In this video, I'm going to run down 10 of the biggest investing mistakes retirees make in the stock market, and we're going to start with number 1, desperate to make money. This is number 1 on my list, as I said. You know, a retiree who's facing dwindling savings may take high-risk chances, and they're chasing unrealistic returns. I call it chasing unrealistic dreams. And these hurried decisions, well, they often overlook the risks that are involved, and they can lead to avoidable losses, and they can lead to even sometimes catastrophic losses. And these losses, well, yeah, they can jeopardize a retiree's financial stability. Believing the hype. This is number 2 on my list. You know, jumping on the bandwagon, that exciting bandwagon of trending stocks or market fads, well, yes, it can be dangerous. You know, hype-driven investments, they often inflate stock values, and they inflate them temporarily, but they collapse. Inevitably, they collapse when reality sets in. And what happens? Well, latecomers are left with heavy losses. Before I go any further, I want to invite you to sign up for my breaking news email. Now, this is a great way for you to stay informed on the news that matters most to you. And these are essential updates that you're going to need if you want to stay ahead of the curve. And they're delivered straight to your inbox, delivered as the news happens. So if you want to receive my breaking news email, just click on the link in the description box to sign up. Trying to day trade. And this is number 3 on my list. And as you noticed, I did say trying to day trade. You know, day trading, it may seem like a quick way to make money. And maybe you've seen people on YouTube or in the news who say they do it and they make a fortune. But it really does demand expertise, and it demands constant market monitoring. You know, without proper knowledge or experience, retirees, well, you can lose more than you gain. And this will just simply erode your hard-earned savings. Lack of an emergency fund, and this is number 4 on my list. And when I say emergency fund, we're really talking about a safety net here. You know, a retiree, you could be forced to sell your investment at a loss during an emergency because, yeah, you don't have an emergency fund to dip into, so you have to sell your stock. And this disrupts your investment strategy, and it does reduce the ability for you to recover financially. Failing to diversify. This is number 5 on my list. And we're talking about putting all of your eggs in one basket. And this is especially risky for a retiree. You know, a downturn in a single stock, a single industry, or maybe an asset class, well, it can wipe out a significant portion of your savings when diversification could have mitigated the loss. Investing based on emotion. This is number 6 on my list. You know, emotionally driven investment decisions, maybe like panic selling during a market drop, or maybe you're chasing a hot stock and you're chasing it out of greed. Well, when you do those emotion-based decisions, well, they can often lead to poor results. Staying disciplined and sticking to a strategy, well, it could help a retiree avoid a very costly mistake. Timing the market. This is number 7 on my list. You know, trying to guess the best time to buy or sell. It's often risky and it's often unsuccessful. And it kind of reminds me of a guy who goes into a bar, throwing darts at a dartboard, has no skill, doesn't know what he's doing, but he's throwing darts and he's hoping he's going to hit. Well, if you have that investment strategy, that philosophy that you're just hoping you're going to hit, you're trying to time that market, well, you know what? You could lose, and you could lose big. My suggestion, before you have this philosophy, this strategy of timing the market, why not watch a few Warren Buffett videos if you really want to learn a better investment strategy? Not researching investments. This is number 8 on my list. And skipping research on investments, such as you're not looking at a company's total performance, maybe you're not looking at their leadership, or you're not considering market trends. Well, when you do this, when you fail to do this, well, it can result in a poor choice, or should we say poor choices. And some folks, I find, do more research on buying a used car than they do on their own investments. And when you're retired, well, you know what? You absolutely can't afford this mistake. And I find that folks that do this, I find that folks who don't do the research that they should be doing, well, you know what? they do it because they're investing based on emotion. And we already know the impact of investing, buying and selling based on emotion. Neglecting long-term goals. This is number 9 on my list here today. A retiree, what happens is sometimes they'll focus too much on a short-term return. They're anxious, they're nervous, they're impatient. So they just focus on that short-term return. Well, when they do that, they're abandoning the strategies that really do support their long-term income needs. And I find, a consistent, well-thought-out plan, well, I believe that's critical. It's critical to preserving your savings for retirement. Ignoring fees and costs. This is number 10 on my list. Hidden expenses like a high fund management fee or frequent trading costs, well, they can eat away at your retirement income, at your profits. So being aware of these fees and choosing low-cost options, well, it could significantly improve your long-term returns. Now, I know there are folks out there who are going to say, inevitably, I get these folks who say, well, Lou, that's obvious. We already knew that. But there are folks out there who get excited. They're making money. They're seeing a return, and they're ignoring the fees. It's easy to ignore them until they hit your account. Well, that's all I've got for you today, my friends. I really hope you found my list of investment mistakes helpful, because I believe if you know the mistakes ahead of time, well, maybe you can steer clear of them. Hopefully you will anyway. I do know this. I know nobody out there wants to see their hard-earned money slip away in the stock market. Now, if you've got any questions, you've got any thoughts, go ahead and drop me a comment or shoot me an email. I do my best. I do my very best to reply to everyone as quickly as I can, but just bear with me, please. I do get a lot of messages. Now, before I forget, I want to remind you, don't miss out on my breaking news email. It's the best way for you to stay up to date on the news that truly matters to you. Well, as I said, that's all I've got for you. And as I always say, have a great day, everybody.